All right, traders, good morning. Happy Monday. I hope you all had a good weekend. Good to be here as always. So, shall be an interesting week. 'Tis the week of big tech earnings. So, if we take a quick glance here at the schedule, nothing that really matters this morning. Tonight, you got Facebook. So, you get the big book face tonight. Tomorrow morning, nothing tech related. So, nothing too huge there. Tuesday night, you've got Microsoft, Google, and Twitter. Wednesday, Wednesday, we've got Wednesday, nothing too major here, unless you're long Coca-Cola and McDonald's. But then Thursday, you've got Amazon. So pretty jammed earnings schedule there, which shall make for an interesting week. Now, as far as these markets go, the slow grind, right? The slow grind continues. So my advice at this point, and I offer this advice with the complete realization this market might just continue to grind like it's nobody's business. But the advice I'm going to offer here is if you do have long positions, be open-minded to taking some of your profits. Maybe not all of them, but at least some of your profits off the table from a few different perspectives. One, you're a bit extended here on this just kind of ridiculous, low volume, short squeezing push. So from a technical perspective, you might find a good looking setup here, but as far as the indexes go, not quite the ideal time to load the boat. Now you could continue to grind like I mentioned, but up here at plus 2 ATR, I think you've missed the easy move. Then from another perspective, and if I was long right now, this is the chart that would have me taking profits. And remember, I'm saying take profits, not so much short the market, just maybe trim some profits here to the upside, would be the chart of the volatility index. You're down here at support. And remember, once we're kind of drifting towards support and chilling out at support, that's when your retail traders tend to get pretty comfy. They're buying every dip. They're buying every out the money call. And guess what? They're winning that game here for like the last 5 or 6 days. So my colleague in the options room, Sam, pretty much explained it perfectly. Retail traders are winning here. Now the professional traders amongst us, we're kind of seeing through some of this. We're extended. It's low volume. The professional traders, we're trying not to too much get caught up in this. But the retail traders who just keep coming into the market and buying those out the money calls, they're winning that game right now. They're definitely winning that game. It's the volatility index down here at support that very quickly could come in and wipe out all those retail traders buying those out the money calls. So it's a chart right now that it didn't matter last week. It might not matter today. It might not matter this week. But it's a chart that eventually here is going to matter. So what you want to make sure you do is, you're taking profits into the low volatility. Then you're stepping out of harm's way here. And you got the ready, aim, fire buy signal setting up. So to me right now, this is the most important chart in the market. If over the next, and I hate to give it a time frame, but over the next handful of weeks here, you get that big push in VIX to the upside, it's a pretty safe bet at that point. At the very least, the indexes are coming down towards a 21 EMA, maybe a little bit more. But in terms of the market, those are the major things to keep in mind. You got earnings this week for arguably some of the most important stocks in the market, some of the most heavily weighted stocks across our indexes, major ETFs, could certainly shake the tree. Not so much here with the Qs, more so the S&P, you are extended. And then the VIX is over there in the corner, looking a little bit sketchy. So that's my thoughts here on the overall market. Now let's go through a few of the setups we covered in yesterday's video. We can start here with Tesla. You've got to be freaking kidding. Are we really about to gap up to 950? Can somebody in the chat confirm? Do my eyes deceive me here? Bid and ask 948. Well, that kind of changes things there. So if you saw the notes I put on Twitter or in the options room, the question here, the note on Tesla coming into today was, does the path to 950 unfold without a single pullback? Apparently here with a bid and ask at 949, the answer is yes. So not only we're not going to get a pullback before we push into 950, We're not even going to get the opportunity to play it here this morning. So let's move on at this point. It's already extended. And what you're seeing here, at least in my opinion, is the power of the weekly squeeze. Two stocks that really can't put the bottle down as of late, Tesla and Netflix, they're both firing weekly squeezes. So you're extended on a daily chart, you're extended on a weekly chart. You got a huge gas tank of momentum here. So this party isn't over until this weekly chart starts to have signs of exhaustion. We're nowhere near that right now. Gap up to 950, huh? Yeah, Drew, that's good for 4-ish%. Yeah, King, I mean, I would agree with you. You're just kind of taking out these big psychological numbers at this point. 900, 950, and you got the big 1,000. Obviously, is your big psychological target next. So now the question is, does the path to 1,000 unfold without a single pullback? With this stock, you never know. But for me, my style of trading, I've got to be careful and fight the FOMO here. My ideal entry is back at the 21. Gap up to 950 this morning. That's going to be 4 to maybe 5+ average true range moves above the 21. Heck of a ride there. I'm not going to be on that one until we get a little dip. But do you get a dip before 1,000? That's going to be the big question here. Next up, you got Upstart, UPST. Solid uptrend, great structure, whole bunch of bullish momentum, and potentially what you have right here could be very similar to what you had earlier in the month. So let's compare these two moves. You get your good push into end of September. You come back to the 21. You consolidate for a little bit. You get your continuation of the trend. Trend continues. You come in towards your 21. Now the question is ultimately, do you get that next leg back up towards those highs off the 21 EMA here? Potentially. If we study this last visit to the 21, the major thing you had here was squeezes under the surface. And typically for me, I'm going to put a little bit more emphasis on the bigger of the squeezes under the surface. I mean, to me, this is basically picture perfect. So my favorite trade, these charts are slow. That's my favorite trade. You get your pullback to the 21, you consolidate at the 21, you go into a daily squeeze, but inside your daily squeeze, you've got, your 4-hour squeezing, your 2-hour squeezing, your 1 hour, the 30-minute. All that energy being built up under the surface on top of your daily 21. Pretty solid spot for some continuation. So here we are again back at the 21. And I would look for a similar trade here. Now, as we can see, the 4-hour chart, no squeeze just yet. For the 2-hour here, let's see. There's a 2-hour squeeze firing short. So for a 2-hour chart, that's not the most bullish structure. What I think you're looking for on a 2-hour chart is something like this. That's a bullish squeeze. You probably had green 10x bars. You had your positive histogram. The bullish squeeze can take you higher. So momentum's kind of rolling towards the opposite direction right now. But you do have potentially ready, aim, fire buy signal here on your 2-hour chart coming into play. So I think a little bit early in terms of, hey, let's find a really bullish 4-hour, 2-hour, 30-minute squeeze on that daily 21. Definitely a little bit early for that. You kind of see the nasty momentum here, not the best structure. But from a bigger picture perspective, I do like support here at the 21. So I think if you get a ready, aim, fire buy signal on your 2-hour chart, you might start to scale into a position. Now, for those of you in the options room, as I mentioned in the notes yesterday, you're not going to get a trade alert out of me on this one. The spreads just aren't, they're not the prettiest. Let's put it that way. Nasty spreads. So I think a call debit spread or some in the money calls here, it makes a little bit more sense. I love to do my put credit spreads, but it does become a point where you're going to be better served with another strategy. So for you options room folks, I like the debit spread JC's trying to get. I'll probably join that party as well. So attack it how you may, but I think one of your better uptrends right now, you're looking for a repeat of what you had right here. Big push, reversion to the mean, reversion to the mean. Here you got a little bit of consolidation, then you got your continuation. So you're in the neighborhood of where you're looking for that continuation over the next week, 2 weeks, 3 weeks here. So I do like Upstart. And a random thought here, not to get off the beaten path, but we're looking at this S&P 500, just keeps grinding, keeps grinding, keeps grinding. Understand now, Tesla's a component of this. A few years ago, Tesla wasn't a piece of the S&P. Now Tesla is a piece of our index here. So as this thing is just on crack, and what's this going to be? 200 points in a few weeks. That's doing the S&P 500 a whole bunch of favors. So I kind of like what Henry said in one of his nightly videos. The recent push in the S&P 500, you kind of look at that as the push that Tesla built, if that makes sense. So along with your sketchy volatility index, if there's anything that could bring this market down, at this point, it would actually be a Tesla coming back down to earth. Vice versa, this party keeps going. It just does the S&P a whole bunch of favors. All right, back to the watch list. Another great trend here in a firm trend, AFRM. Now, it's not my favorite entry in the world. The ideal trade was back here. I didn't take that, but it's worth noting that's the ideal trade. Daily squeeze at the 21. You probably had a 4-hour, a 2-hour. Beautiful stuff. So you get your easy push here. Now you got a good 3 or 4 days, 5 days, consolidating at your 8 EMA. So when something is in a really strong uptrend, you will sometimes get the pullback to the 21. But if there's a lot of momentum getting kicked out, you might just kind of hold up at your 8. So the 8 EMA becomes the pit stop for a stock that's really moving on some momentum. So what I would look for here is a squeeze. And in this instance, you got squeezes on a 4-hour, 2-hour, 1-hour, 30-minute, 15. So right on top of that potential launching pad, right at that pit stop, you got squeezes everywhere. 4, 2, 1, 30-minute, 15-minute, probably a 5-minute. So the question is, do these squeezes one by one start to fire long? Which at that point, that's just giving you continuation of the really strong uptrend. So the trend you're trying to play here, it's that trend based on that daily chart. You're looking to take this momentary break in the action at the 8 EMA is a potential opportunity to build a position. Also take note of all the green 10X bars. So we're consolidating, but we're consolidating and bullish momentum is still on the up and up. Weekly, 3-day, daily, 4-hour, 2-hour, 1-hour charts. Bullish momentum still increasing. You might have green 10X bars here on your 30-minute chart as well. We'll see. 30-minute is neutral, but y'all get the point. Heck of an uptrend, catching its breath at the 8 EMA. Good squeezes, good bullish momentum to the squeezes. Do they fire long? Do you get your continuation? Can't stress enough, though. This dips to the 21 EMA. It's a dip I think you want to buy. So the difficulty of getting long, at least here's how I kind of internalize it. The difficulty of chasing this and getting long here is you're probably taking some pain on that pullback to the 21. And some of us might even get shaken out or stopped out on the pullback to the 21. Well, if we look at the trend and we respect the trend, don't we ideally want to be buying here? So it's something my dad says to me time and time again. And I'll paraphrase, but basically it sucks to be taking a loss. It sucks to sell when you really wish you could be buying. So I'll take an entry here, sure, but boy, would I love an entry at 21 EMA. So I say this to say, if I'm going to take an entry above the 21, more likely than not, I'm going to structure a trade in the terms of risk management, the structure of the trade, the time till expiration. More likely than not, I'm going to structure a trade where if we do dip to the 21, I can comfortably hold on to my position. maybe even add to the position. But as swing traders, if you kind of adhere to the mentality I think a lot of us learn from John's books, that's where you're looking to build your bigger position. So chase it if you want to chase it. Take the somewhat extended entry if you want to. But do you really want to be selling for a loss when you should be buying? That's kind of the mindset here. So I might structure something, and with November 5th expiration, you got some good premium here. You got some pretty good premium. But I think anytime you're above the 21, you keep that in mind. A dip to the mean here doesn't change anything. It's just a better buying opportunity. I like that, and we're going to go through the rest of them here quick, y'all, because the rest would require a pullback. The old P word. NVIDIA. Nice daily squeeze, brand new all-time highs. Plenty of time before earnings, but a bit extended. I'd take it on a dip, probably to the 21. AMD looks really bullish. I think you're going to be gunning for new highs here, but you have earnings in a few days and you're extended. So I take AMD on a dip. I mean, this one looks really good. So I would love a dip there. And I would take some Broadcom. Another name hitting an all-time high. I'd take a little bit of Avgo on a decent flush back down to the 8, ideally to the 21. So those are on the pullback watch list. I mean, can we even call Tesla? I mean, would it even be a pullback at this point? Yeah, this is just the degenerate in me so badly wants to come in here and sell some calls today. That might also be like, walking up to a grizzly bear and clocking it in the nose. Might not be the best idea. So I want to get long Tesla at some point. In terms of what the heck does that look like? Who knows? Who knows? Netflix, I'd take on a dip. Great looking trend going there. And remember the common characteristic between the two of those. Netflix has been incredibly bullish, incredibly steady. Tesla's been incredibly bullish, incredibly steady. Now, a few months ago, these weren't the easiest stocks to trade. Reason being is they were trapped inside their weekly squeeze. And now they're breaking free. So you're looking at two stocks that basically took, in Netflix's case, it took a year off. In Tesla's case, it took 6 months off. They're finally back in motion. So you got to be careful here. You want to have the rules in place, right? So a rule of mine is, 2 to 3 plus ATR, we're a bit extended. I'm not going to chase it. Don't confuse that with a shorting opportunity. Just because Tesla's extended on its weekly chart, and it's going to be even more extended today, just because it's crazy extended on its daily chart, that doesn't make it a short. This stock is in motion again. It's working on momentum again. It's back into a trend again. Got to respect that trend, even if it gets crazy, crazy extended. Now, along the lines of this, right? As you can see, that weekly squeeze can give you a lot of momentum once it finally fires. The difficulty is trying to, shuck and jive and shake and bake inside the weekly squeeze. Because everything is, it's choppy, it's range bound. Your moves, both to the upside and the downside, they're so short-lived. So here comes your Tesla daily squeeze. It fires long, and 5 days later, you're back to square one. And here's your squeeze. You fire long, and you come right back in. And the squeeze fires short. It bounces. It's tough to play these things when they're in that weekly consolidation. So if you look at a daily chart of a Lucid LCID, very much the same set of circumstances here. Good looking daily chart, nice move. Granted, a great move here, but you're not getting into motion. You're at square one, you make a nice move, you kind of come back to square 1.2. Nice move. We're not going anywhere. So there's a series of nice pops in both directions, and if you're quick with it, you can catch a little bit of that. But as we've seen from Tesla, as we've seen from Netflix, the big boy move is when that weekly squeeze fires. So I do like the weekly squeeze here. I don't like it for a trade that's going to require any of my time and attention. for like the next 3 months. In other words, you set up something for like December, January, forget that you have it. And hey, if this weekly squeeze fires long, like in Netflix, like a Tesla, you got a really present surprise coming your way. But it can just be so sickening. Trying to live and breathe all that chop fest. So that could be like a, set it and forget it kind of swing. But that's what I got for y'all there. Tesla, Netflix, Nvidia, AMD, Broadcom. Would love a pullback opportunity. AFRM, again, you're a bit extended here, but you do have basically squeezes everywhere inside your daily chart on top of your 8. So I think you structure a trade potentially for the next leg higher. You do so, I think, comfortably sitting through any dip to the 21. So position size appropriately, allocate enough time here. That's just a dip you want to buy if it holds here. So don't get shaken out on that. Potentially add to your position on that. And then you got some upstart. Again, not the best candidate for a put credit spread. There's big premium, but the spreads are just a little cray-cray. It shall be an interesting week, y'all. So few setups there. Major thing you got to keep in mind. If that volatility chart, if that turns into a problem here, so to say, market's probably coming in. I would say quickly, and I would say at the very least to the 21 EMA. Understand the potential impact of whatever you're swing trading if, in fact, the market does pull back here. Because if you get long UPST or Affirm today, you get long Tesla today, and the market goes up another 7 or 8 days straight, you're in great shape. Like, you're golden. If the market quickly comes back to home base here for a bit, whatever you're swinging might get caught up in that. So right now, I think it's a little bit more about the structure of the markets. I think it's a little bit more about the reality of you got earnings here for what I would consider the most important stocks in the market this week. And then last but not least, you got this guy looking a little sketchy over here in the corner. So he's not causing any problems just yet. But next thing you know, he's swinging from the rafters. But that's what I got for you here, y'all. I got a couple of minutes before I got to jump into the options room. So I'll get the futures up, get caught up in the chat. And we shall be ready to rock and roll this. Yeah, Steve, I'll grab that off my Twitter for you. I did share that a few days ago. Now, keep in mind, it's not going to have the premium indicators. So it'll have the regular squeeze, not the squeeze pro. There won't be 10x bars or the stacked EMAs, but I can give you the layout with the original squeeze, the 21 EMA, the Keltner channels. Where the heck's my Twitter? All right, here we go. All right, Steve, got that link in the chat for you there. So, Drew, the Ready Aim Fire, it's a heads up, if anything, for me. It's really a heads up. Reason being is the vast majority of my trades, they're not overbought, oversold trades. So the Ready Aim Fire, this is nice for potential moves back to a moving average. We've got a few minutes here. So for example, we did a trade a couple of weeks ago in the options room, and this was a reversion to the mean trade. Amazon's oversold. Momentum starts to kind of die down a bit. And on your 2-hour chart, you get your oversold buy signal over here. So we sold the put credit spread. We caught the bounce. That's a move back to the moving average. 99% of my trades are moves away from the 21. So typically if I'm trading Amazon, I'm going to get long here and take profits here, or I'm going to get short here and take profits there. So I tend to play the move away from the 21. The Ready Aim Fire is useful for the moves back to it. So for me, more so than a direct signal, it serves as a bit of a heads up. With the VIX being the best example right now. All right, we're at support. So, I take that into consideration alone. But as I start to see a potential oversold buy signal setting up, this is going to be kind of at the front of my mind here. And not a week from now, potentially, is it's up here at 24.25. So for me, up to this point, it's been more of a heads up kind of indicator versus a direct, all right, I got my buy arrow. This is what I've been waiting for. And now I'm going to get long. Yeah, Andrew, I saw that Tesla's buying not Tesla, Hertz is buying a boatload of Teslas. Which just, it just saddens me. A couple of years ago, Hertz had Corvettes, Z06s. The shift is happening, my friends. Texmar. If you happen to be in any of the simpler trading rooms, we can share the squeeze columns with you. So if you do happen to be in one of those rooms, just ask one of the moderators. They can share that with you. And this is something I was kind of working on behind the scenes, which we're still kind of working on. So I'll go into detail about that at a later date. But also, TextMan, if you're not in any of the options rooms or any of the simpler rooms, if you do a YouTube search for TTM Squeeze Thinkorswim watch list, one of the first videos will show you exactly how to do that. Slightly different code, but same end result. Yeah, Rocky Mountain, it's insane. It's insane. I see dudes hitting 0 to 60 in like 2.5. Silently. It's got to be a trip. All right, y'all, I hate to cut it loose here, but I got to jump into the options room. I hope I've given you a few things to take into consideration here in the slow grind. And just remember, with a slow grind, it can keep on slow grinding. It can grind itself silly. Typically, the move back down to earth, it's not as slow of a grind. So we're pushing, we're inching, we're scratching, we're clawing. Typically, everything comes down pretty quick. So, not to say it's going to happen, but take that into consideration. Take the VIX chart into consideration. If you have a bunch of juicy open profits on your longs, maybe you pay yourself just a little bit here. But I appreciate your time, guys. I will see you again Wednesday morning. Looking forward to it. And I wish you the best of luck. Talk to y'all soon. Thanks for your